All right, we're going to call this meeting to order at 6:32. Thank you for everyone attending. Thank you to the public. Mr. Todd, could you lead us off, please? Go ahead.
Before we do that, Mayor Crane, we need an acceptance of the agenda.
Sure. Get a motion for that?
I'll give you that.
Councilor Waring. All in favor? There you go. New business, MNP 4.01, Audited Financial Statement Presentation. Now, Mr. Sharp, you may take it.
Thank you. Through the mayor this evening, we have Myers Norris Penny MNP in town to present the 2018 final audited statements. I'd like to turn it over to Sean.
Go ahead.
All right, thank you, Mayor and councillors, and appreciate being able to be here with you this evening to review the financial results. As you're aware, this is our third year working with you, and we've completed our audit, and we're ready to sign off on the financial statements upon your approval after we review some of the highlights herein. So there are some documents that have been circulated to you previously. I'll just talk to a couple of those items, and then we'll get into some of the highlights within the financial statements, if that's all right with you. Consistent with all audits that are undertaken, there's always a process by which the auditors come in and verify information that's presented so that it is recorded in accordance with their underlying documents and pursuant to the accounting guidelines. What that all means is basically there's a framework in which you have to present the statements, and the framework for municipalities and towns is government or public sector accounting standards. So there's a framework it'll look different than if you were doing a regular corporate set of statements. Right? So there's different presentation to it. As we conduct our audit, we conduct it in accordance with generally accepted auditing standards, wherein we verify the information. And as you would imagine, we don't look at every single transaction. We will take a sample and verify the information with an emphasis on making sure that it's recorded not only on the one side, but as there's double entry accounting. So you'll see an increase to receivables, for example, would always be an increase to revenue, and collections would be a reduction of receivables. So every transaction has two sides to it, and we verify both those components. When we look at the areas in other town, we look in areas that are what we consider either a higher risk or have a greater scrutiny placed upon them. And we call those the emphasis or audit emphasis is the areas that we talk about. There's the four major ones that we look on have to do with the presentation of the SRUC financial statements, because you own 45% of that entity, so it gets brought in on a consolidation basis, and that's independent of all the transactions you have with the SRUC entity. So we look at that carefully, and we look at if there's any changes during the year that would change the format in which it is used. It is used in the same way. We do that 45% consolidation. The other major area of the four that we look at, there's revenue itself, again recorded in accordance with the underlying documents. Deferred revenue, and what that is just pure timing, right? So if you receive a grant specific to build a new sports arena, but you haven't built it yet, right? So you'd put the money would come in, it would set up as deferred revenue, which is a liability until it's used. The idea being, if you don't use it, you have to give it back, hence a liability. And then when you recognize it, when you build a facility, it comes in as capital revenue, and the building of the facility creates a capital asset, and they're on two different statements. The point being that you've been funded for it, you've got a revenue, a growth in your equity, but you also have a physical asset that sits on your balance sheet. So it looked like it's a disconnect, because in the year that you receive the money and you build a facility, you'll have a huge surplus, because the asset is not an expense. It's a use of funds, but it's not an expense, right? And the next year, when you start to use the facility, then you allocate a portion of the building over its expected life. So ignoring everything else, if you only had a $5 million building and you use it over 5 years, you'd have a $5 million surplus in year one and a $1 million surplus for each of the next 5 years. Over the whole life, it's a zero. But because you report on 12-month segments, that's how you get a disconnect in that information. So don't let that confuse you when we get into talking about what the surplus is for the year. I'll re-emphasize that. The other major area that we look at in the audit is payroll. And that's just having to do with making sure that the individuals are receiving what you've agreed to pay them. And again, it's in accordance with the contract agreements with them. All of our examination, when we're looking at these things, is based on professional standards. And there is one of those things that's changed within the audit report this year. And I will get, if I can get you to scroll down to I think it's the bottom of the next page. There is a change to the way the audit report goes, and it adds, in my opinion, a great amount of clarity to individuals who use these financial statements. Keep going. Right there. Back up a little bit. Okay, so the auditor responsibility, reading through, and I'm not going to read this to you, I'm just going to point out a couple of things in here, right? So there's four bullets that have been encouraged by the professional standards to make sure they're presented in the audit report, so that anyone who uses the statements can look at these points and they say, well, what do the auditors do besides show up and dig into everything, and everyone feels like they've been sent to the principal's office? It's not that way. Okay, we have a standard that we have to comply with, and these extra bullets here explain that perception better to individuals who use the statements. So since we've come to the statements, I want to touch on a few of the highlights in here, and we're gonna, if you have the statements with you, and I believe you have them with you, we're kind of gonna jump through a few different areas. And again, it's not my intention to go through every line, because you'd be asleep in no time. Well, except for Cindy, she'd be right into it. So we will start with statement of operations. One more page down. Scroll down just a little bit further. So unfortunately, it's tough to see the full screen here at once, but the first column of numbers is the budget. The second one is the actual for the year, and the third is the comparative, so the 2017 figures. Okay, scroll down just a little bit further, please. Okay, so here we got the excess or deficiency of revenue over expenses. That's basically your surplus. Your budgeted amount is $226,000. Now, first of all, you think, well, actually, we budgeted for 165, and that's true. But within, when you budget for drawing out of the reserve is not a current earning. It's a use of accumulated earnings from before. So out of this 226, there's a note at the end of the statement, so I'm not going to jump there, but it basically says, here's your 165 you budgeted, here's the two adjustments for contributions to or withdrawals from the reserve to get to the $165,000 budget that you were expecting for more operations. Now, obviously, you're going to look at this and say, well, okay, well, we budgeted for 226. Why in the world do we have $1 million deficit? And that would be because there is, in the actual expenses, is 1.3 million of amortization. You recall when I was talking about the sports facility that you would allocate a cost over the period of use? When you're doing your budget, you've been presenting your budget more on a cash basis, because that's what drives the municipality, right? That's what drives the town. But there's still an amortization component that goes into the actual expense, and that number is 1.3 million. So to get back to compare your actual to the budget amount, you take your $1,089,000, add back 1.3, and you actually end up with a surplus of 273 compared to the 226. Okay, so putting amortization to the side, you're pretty close to your budget overall. The next line down there has got government transfers for capital at 2.9 million. That would have been, or that is, the amounts used to construct tangible capital assets. You recall how I said you get a disconnect because in the year that you build or construct things, you have a 2.9 million, well, in this case, you have a 2.9 revenue, but all the spending on the physical assets is sitting on your balance sheet, so we've got a disconnect between the two, pardon me. So this, scroll up just a little bit, please. So these expenses here are what's known as your functions, right? So this is as you're doing disaster services or administration. These are the expenses by function. So what most people understand, okay, so that's great to understand that side of it. But there's a schedule in the statements, and I believe it is Schedule 5. That'll be 7 pages down, so it's on page 9. And these are the expenses that most people understand. They're less about the function of what's going on. It's really about, okay, who do I pay salaries to? Not who, but what are the salary amounts? What are the amortization amounts? So this schedule breaks down the expenses by object. By object. So you get both of those categories in this set of statements, so you can figure out what's going on. And in most cases, like I say, other than the amortization, which was not budgeted, most of the others are fairly close to what you would expect for the budget. So if we jump back to cash flows, which is on page 4, if you recall, we were talking about the surplus. So the cash surplus is about $1 million, right? So the cash flow statement gives you a better picture of what's going on in the community, not irrespective of, but it takes into account timing of things, right? So if you've got receivables you haven't collected, or holdbacks you haven't, or other payables you haven't paid, they show up on this cash flow statement. Down a little bit further. Okay, so again, the first column, or the column on the left of numbers, that's the 2018 results, and the 2017 is right beside that. So looking at the operating cash, so it starts with your net income, and I'm not going to go through all the lines here, but the idea being, taking the timing out of it all, the cash generated from operations is $1.1 million. And then out of that 1.1, you used cash of 2.4 million to acquire capital assets. Okay, so now you're going to think, well, that's not the same number we looked at on the statement of operations. That's correct, because this is cash out the door, right? So if you had our revenue was 2.9 for government, or for capital assets, 2.4 of that is actual cash out the door. The other 500 grand is sitting in accounts payable to be paid, after December, right? So it just helps to clarify the actual cash in, the cash out the door. Okay. If you jump right to the bottom, you can see, okay, so the cash itself, so in 2017 on the far right column, cash at December 2017 was 971,000 and is 287,000 this year. So where did it all go? What happened to it? The large piece has to do with, if you can see the line called increase in trade and other accounts receivable, 864,000. That's the change on the balance sheet. Remember that timing thing? So just to make it more clear, that takes the timing out of the picture. But what it does help to clarify is that in your accounts receivable at year end is at least 800, in fact it's 963,000 related to capital assets that you've funded out of your own coffers until you get the money back from the government. And this is the DRP, one of the DRP projects that's on the go. And of course, as you've been funding this out of your own dollars, not only did you use up a big chunk of your current cash, you've also pulled 800 grand out of your investments on a short-term basis to be able to fund these operations. Okay, so you still got a little bit of a cash in the bank,
Yep.
but you've used some of it to keep moving forward with building the information you needed.
Just for the public's clarification, DRP is Disaster Relief Program. Continue.
Thank you, Mayor. Okay, so that, we've talked about the big picture of the functions, the big picture of the, cash flows. If we jump down to page 10, this is a landscape page. I'm not sure we're gonna get it all on one page here, but this one breaks it down into segments. So these set of statements, while you're flipping to that page, these set of statements are prescribed by the government of Alberta, where basically you take your schedule, so that the financial information, and it's broken down at least 3, 4, 5 different ways, depending on the area of interest that the governments want to look at. Okay. So whoa, that's tiny print, isn't it? Not sure we can make it much bigger, still be able to see the whole thing, but the point I wanted to bring to on here is the, so as you look across each of these are the programs that you're operating, or segments as you would call them, right? So if you look at the STRUC side of things, so this is the Water Utility, Regional Utility Corp, right? So it shows 319 of revenue coming in, and this is actually your 45% of STRUC, right? So that's your 319, roll down to the expenses, and keep going right down. You have to combine two numbers. So their operating expenses were 252, but they have amortization of 90. So out of the 319 of revenue, they spent 340-ish on operating, not cash, but just on operations. As a result, they have a $23,000 deficit. When you look across, so looking at the bottom line going across each of them, you'll see how each of these different programs, some look like they're in surplus, which have funded other segments, while other segments are in deficits along the way. And they're funded by general operations. Okay, so everything we've talked about so far, it has been the operational results for the 12 months ended December. So if we go back to the balance sheet, which is page 1, or statement of financial position, this is a snapshot of the town's financial status at December 31st, right? So obviously it's a snapshot, and it'll be different 2 days before, and it'll be different 2 days after, right? But as in a snapshot, when we get down to here, there's just a couple things I want to just re-emphasize basically. Okay, so we talked about the cash, the change in the cash. You can see the investments line where it went from 10.5 down to 9.7. And right above that, we've got that trade and accounts receivable. You recall I was talking about there's an increase in the receivables, 960-some thousand from the disaster recovery side, DRP, disaster recovery program, right? And that you'll be collecting that, in the future, but at December it was still to be received, not received yet. Other items, so if you step back from this whole thing, you look at, okay, so what have we got in what I'm gonna call liquid assets? So that includes your investments. There's 12.4 million, and the other side of it is liquid, or I'm gonna call them liabilities on demand, if you will. Now, they're obviously not, but if you had to pay everything back, and if for whatever reason the town had to shut the doors, it doesn't happen, I know that, but you'd have 12.2 or 12.4 of liquid assets versus 7.5, hence you've got a $4.8 million available resources to continue to operate going forward, right? So this is not surplus, let's go have a party. This is, okay, so we've got a bit of a nest egg that we can work with as we move forward to make sure to provide the appropriate services to the residents. And the last two items, we'll scroll down just a little bit. So when you look at the tangible capital assets, this is the bricks and mortar and pavement and infrastructure that you got out there. Its cost base is 44 million, right? And that's what it speaks to most of the accumulated surplus, which is 49.
What's the, sorry, what's the formula you use to calculate or overall value of 44 million, for example? What's the, there has to be a formula.
Well, it is, it takes the historical cost.
Yep.
So again, the building we talked about, if you had a $5 million building, it takes your original cost, less the allocation of, or the amortization expense over the period of, up to the period that you're doing a snapshot, and then that's the value.
Right.
So if you wanted to know the actual cost in all your assets, so it's actually on schedule two, we won't jump there, I'm just gonna talk to it, but the cost base in all the assets you have is 67.8 million for everything you have out there. And on, against that, you've got 23.7 of accumulated amortization to get to the book value of 44.
Right. Okay. Awesome, thank you.
Those are the highlights, Mayor and Council members, those are the highlights I wanted to touch on for the financial statements. And my presentation to you.
Well, thank you very much. Council, any specific questions you may have? Looking down you, Sandy.
I only have two. Sorry. In the operating revenue expenses, I'm just seeing what page that is. Page 2. There was a big restatement of 2017 numbers this year, mostly to do with the water supply and the wastewater. Do you know offhand what I'm talking about?
I hit it.
Are you talking about the, no, I guess short answer is no, I'm not exactly familiar with your, I have an idea, but I'd like some further clarification.
Take yours off. There you go.
Yeah, so the actual total expenses stayed the same, but it was just juggled between categories. So our water supply and distribution, last year, the expense was 900,000, this year it's 350,000. And same with, wastewater treatment went up, administration went up. Certain ones, there was a juggling between categories, so I'm just wondering, was that just difference in policies, new policies that came into effect, or we weren't categorizing things right? Just wondering for comparability. The biggest one being the water supply. I don't know if it's because of the SHRC, but the numbers changed quite a bit when you restated the numbers for 2017, and then they carried forward the 2018 numbers are following suit. So it might be a question to look into for a later day.
The quick answer to that is that, yeah, there's 673,000 that was reclassified. On last year's statements, it was classified as operating revenue and hence operating expenses. And as we looked into that, as we're talking about current year uses, we looked into that into more detail and concluded it wasn't an operating, it was more of a capital. And it moved, both of those components were what part of the transfer that went over to SRUC itself.
Thank you.
I did
Go ahead,
have one
Cindy.
more question. Yeah, page 9, schedule 5. There was a new item this year, provision for non-collectible trade and other receivables. Is that just somebody cleaning up the books that we had a bunch, 60 grand that couldn't get paid back, or what was that one about?
Yes, it was, there were some old receivables that were determined to be uncollectible, and that's what it's a non-cash item, but it is a reduction of the receivables that were previously on the books.
So basically a write-off then?
Correct, a write-off, yeah.
Yeah, we'll get more information from admin on that.
Councillor Wilkie? Councillor Wilkie?
Apologize, these are gonna sound, the audit is the audit. I'm not an accountant, so I don't wanna get into details on accounting. I am Finance, so I just wanna touch base on some of the kind of due diligence type questions, how the process worked for you, how, you found your process. Obviously, you got to a clean audit at the end of it, but just understanding some of what goes behind that. Were there any changes to the scope of your audit relative to prior years, or has it been the same scope as previous?
The scope is the same, and the amount of work that goes into certain areas increases based on findings, right? So if you're looking at an area that you expect to be fairly straightforward, you will have, your scope will say, we're gonna look at these 4 items and call it good, assuming they get their support. In some of our instances, we started to look into some of the areas and it didn't look right. So we would dig deeper, and then we would work with the finance department and say, okay, we need some help understanding where these went along the way. You know, what happened to them, how they get adjusted. There were a significant amount of hours that were put in both from the administration and from the audit side to make sure that we get to a clean opinion, and many adjustments were put through the records to get to where we're at.
Mr. Wilkie?
Is it fair to say that, I mean, that's no different from any given year, I guess, right? It's just the amount involved in any given year differs. The actual exercise of the audit is the same process. It's just the amount of required work every year. I think I understand where you're coming from. No need for an answer. Were there any significant changes to accounting treatment where administration has choices with respect to accounting treatment relative to prior periods that stood out to you as unusual?
The biggest change of treatment had to do with the 673 change from operating to capital for the assets that were transferred to SRUC. So that was the biggest change as far as that one goes. And as you mentioned, Councillor, there was more work put into it, and there was, there was quite a transition through the finance department with some temporary folks in here. So that was what led to the work both from the finance side and from the audit side, following that along.
Thank you.
Sorry, it won't be much longer. Two-part question, I guess, how would you characterize your relationship with the finance staff at the town and how that audit process worked? I know there was some turnover, but with the staff in place during the audit period, was it a constructive relationship? And did you have any issues getting information that you needed to complete your audit in a timely manner?
I think we have a good working relationship with the finance department. I will leave them to comment on their own perspective, but as we work together, it becomes a team effort, right? Because so there's some of the things that the finance department are able to find, and there's other ones they came across working with the staff, said, okay, I think this is it, but can you just double check it before we finalize it? So we, as a group, we would work together to accomplish those tasks.
Thank you. Mr. Wilkie?
Last one. Were there any areas of accounting treatment that differed in any material way from similar municipalities that your firm may have audited? Areas where we're different that are just worth identifying to council?
The accounting treatment is consistent across all municipalities. Hence the standard, the compliance standards, both for public sector and for each municipality that we work in. MNP audits a lot of municipalities, and from the larger cities down to smaller hamlets and summer villages, as a matter of fact. And each of them still must comply with the same reporting standards. Just the volume of transactions through and the emphasis of segments that are being worked on by each municipality will differ from place to place, but it's the same scope, same reporting standards.
Sorry, just a follow-up to that. Where it comes to questions of treatment, there are the standards, and then there are decisions made by staff. as to treatment underneath of those standards. Were there any areas that may have fallen under standards, but where you would consider that treatment under the accounting standards to be materially different from other communities that you see? Any areas that just jumped out at you as, I wonder why they're doing it that way, it still meets standards, but I wonder why they're doing it that way?
If I can read between the lines of what I think you're asking, Councillor, with the adjustments, we see the preliminary information that comes to us, and then say, okay, this is what's reported. And when we look at it, we say, okay, well, that doesn't fit its underlying documents. So then then an adjustment is made.
Okay.
There were more adjustments this year than in previous years.
Yeah, and that's fine, it's more a question of, we're not doing anything materially different from a treatment perspective from other communities then, and I think your answer is, it's within standards, within the standards, hence the clean audit, hence we're similar to other communities in that regard.
Correct.
Okay.
You are reporting the same way, you're using the same numbers, the same standards. It's consistent throughout all the municipalities that we work with. And irrespective of whether MNP works with them or any of the other accounting firms, there's consistency in how the standards are applied.
Okay, that's everything, thank you very much.
Thank you.
I'm gonna go back to what you talked about at the very beginning of your presentation on page 2, and if you can walk me through the expenses again, I'm just not quite understanding the difference in the 2018 budgeted versus the 2018 actual.
Okay, in the budgeted figures, you have been budgeting based on a cash basis. You know, as revenue comes in, it's recognized as cash. As you expect to use it, it's recognized as an expense. The one expense that is not budgeted is the amortization or allocation of a capital asset over its period of use. So I think, Councillor, that's the area that you want me to just address briefly?
Please,
Okay.
thank you.
So when you do your budget, you've come up with a surplus, ignoring the reserves. You're budgeting for a surplus of $226,000, and yet when we look at the statements, this is what you're saying. Well, we have $1 million deficit. What did we do wrong?
Mm-hmm.
And if to adjust that, to adjust that, we simply take the amortization out of the actual. Okay, because it's in there for accounting purposes, but you take that back out and you would say, what is my actual cash deficit or surplus for the year? So you take the $1 million, you add back the 1.3, or take it out of the expenses, and you end up with your adjusted surplus of 273. How do I get there?
Yeah.
Where do you get 273? Yeah.
How do I get there? So the $1,089,000.
Yeah.
Okay, that number includes 1.3 million of amortization, but you don't see it on this page, and I think that's where the confusion is coming
Yeah.
from.
The amortization is built into every one of those units.
Correct.
Whereas it
Yeah.
isn't built in during the budget process.
Correct.
Yeah.
The biggest line item that you can see here, you see the transportation services where you
Yeah.
budgeted for 788,
Mm-hmm.
and the actual is 1.4.
Yeah.
In that 1.4 is just over 500,000 of amortization, right? So if you take that back to a apples to apples comparison, you'd have 900,000 of actual, again using the 500, compared to 800,000 of budget.
Okay. So we actually have a surplus of the 273,000.
Yes, there's a surplus, ignoring the amortization.
And ignoring the amortization gives us 226,981.
Would you be a deficit if you had the amortization? Cause you said 1.1 or 1.09, 1.3 was your amortization, would you be 200 in the hole then?
Yeah, we would have a 273 surplus. If we didn't have to account for amortization, you'd have a 273 surplus.
Right?
Is that,
But if you account for the amortization, that's.
Use your microphone, Gary.
Sorry. If you account for the amortization, you still have a 273 surplus or not? That's what I thought.
Correct, if you leave the amortization in, you have an operating deficit of $1 million. Okay, that's operating, right?
Okay.
So the next line down deals with what are you buying in capital assets out there?
Okay.
Yeah, confusing. These
Yeah.
numbers, it's not- But may I? But the amortization is in the 2017 numbers as well.
And then I'll go to you, Leonard.
You won't hear me anyway, I've got a cold like
Speak
crazy.
right into it.
So on the 2017 numbers, the amortization is in those, it's in the 2018 numbers, but it's not in the budget numbers.
Correct. Yes, the amortization is in both of those numbers, right?
Yeah.
How much is it for the previous year?
1.3.
It's basically 1.3 in both years, and I'm looking at this from Schedule 5. So you have 1.36 of amortization in 2018 versus 1.301 amortization in 2017. So basically the same number would be in place in both years.
Yeah, that makes sense.
Okay. Councillor Holiday or Hamilton, are you good now?
Is there a way that we could be reporting it better so that, I just have a hard time reading this the way that it is with the amortization being reported at a completely different page. Should we, is there somewhere that we should be, when, at budget time, accounting for it better so that the consolidated statements make a little more
Talk to the
sense?
CPA.
Well, I'm just wondering if there is a better way to be doing it, so we don't have a, is there a recommendation? I don't know.
So, I can answer that if you'd like. We have had a discussion amongst, with Sean and David regarding whether it would make some sense to put in depreciation into our budgeting process. We can, it's not a requirement, but we can, and for ease of presentation, if it's easier to provide that information, but it's something that we'd have to look at for the next budget season. But you can show it either way. It's not wrong this way. We can decide to incorporate the amortization in. It's just choice, basically.
Okay. Thank you, yeah, that'll be a council discussion for sure. I agree though, it's nice to have the one pager in the end after the final discussions. Any other questions from council? Yep, Councillor Hamilton.
Is there gonna be another presentation on this report, or are we talking about this right now? I'm just wondering, I've got some questions about the notes, or no?
Mr. Chair?
So I'll defer to Sean for that one. We don't, staff doesn't have a presentation on that. I'm not sure if Sean had planned on presenting anything in that package or not.
We had, as we started down the road, we used this as a guide to go into the statements and talk about them. So the other information within this package that you're looking at, will, cover off more of the issues that are of interest to you, and I can continue with a few of those highlights for you. But there would likely not be a separate presentation for it. The rest of the report kind of summarizes the findings, what we came across. And I'll continue with that, if that's all right.
By all means, yes.
Thank you.
So on that, if you're following along on that page, looking at page, the bottom of page 4. So this has to do with, as we complete the audit, of course, we're looking at the internal controls that are being in place to make sure that things are accounted for, that you have your underlying source documents in place to support the information. When we look at how the information is being processed, we look at these internal controls. Our recommendations are that there's a couple areas that could be improved, and they resulted from the transition and changes throughout the year with the staff members that were in place. The two recommendations we have to bring to your attention is to increase the frequency with which they are reconciling the tangible capital assets and the amortization. That took a lot of time on Corinne's part to use one of the systems that's out there. Citywide is it's a software for doing tangible capital assets, but it was not being reconciled or compared to what was in the general ledger on a frequent basis. It was, when we got to year end, a lot of work went into getting it up there. But if you could do that on a quarterly basis, you'd have more frequent information, more availability to what the amortization is gonna be, what the capital assets are that you have on hand. Related to that, with the transition of so many staff, there were areas that people were working on prior to their departure that they took the knowledge with them. You know, so things were being, okay, well, this is for example, right? So if I'm looking at a bank reconciliation, there's items that aren't outstanding anymore, I'm just gonna put them in a clearing account. So they take them off the bank account, put them into a clearing account. And as we were working with the audit and working with finance, we came across a number of those that had been there for several months. Just because the individual who was working on that component left before they finished the next step. Step one is, I have an issue, I gotta resolve it, you put it here. Step two is, okay, now let's resolve it. Right? Step one would happen, so the bank reconciliation was complete, but step two hadn't happened regularly. It did happen from time to time, but it wasn't regularly being done. So our recommendation is to increase that supervisory review, the frequency of it. So instead of X many months, just do it on a monthly basis. It becomes part of your monthly routine, your monthly processes to ensure that everything is stated properly on a timely basis. The next page, page 5, deals with areas of were there any things that came to light that were untoward, right? We confirmed that there was no identified or suspected fraud. You have complied with each of the laws that are applicable for the town. And the related party transactions are reported properly, in other words, the transactions with SREC. And you are able to continue going forward as a viable entity. I went over to page 7, which was giving more details about the processes we put into the areas of audit emphasis, right? Dealing with the investment in SRUC, the revenues, deferred revenue and payroll, stuff that we spoke about earlier when we first started this discussion. And that goes into details of how we've accomplished that audit there. The page 8 and page 9 deal with a summary of the transactions that were adjusted. So page 8 is the adjustments that we put through, and they're quite summarized. The number of entries on each entry itself is with the finance department. From your perspective, these are the major areas that we have completed our adjustments on. And the value at the bottom was the change or reduction to the surplus that was previously reported prior to the audit being undertaken. The next page deals with unadjusted differences. These are ones that we identified and concluded that the net value was not significant. It would not change a financial decision based on the financial statements, right? And again, that's that number at the bottom down there. So if these adjustments had been made, it would have increased the surplus by $25,000. Given the magnitude of the operations, or a $6 million operation, $25,000 was concluded it would not change your decision if you were basing it on the financial statements. Counselor, is there any other areas that you wanted me to touch on in there?
No, thank you. None for me.
Anyone else? Councillor Rab is hugging his microphone. Go ahead.
I guess the most important statement is the one you make at the very end of this, conclusion here. There are some discrepancies or, you know, well, something unique anyway. But these unadjusted differences have no effect on our audit report. I think that's the important statement for me as a councillor. We did have a lot of flux in our finance department this year, so, you know, that would increase the chances of errors happening.
Thank you, Councillor Rapp. Anybody else? I would like to point out page number 6, matters arising from management discussions. We would like to formally acknowledge the cooperation and assistance we received from the management and staff. There were no disagreements with management, unresolved difficulties, or other irregularities encountered during the course of this audit. So I think that speaks very well to your experience here with our staff and how that went. So it's nice to see that you formalized that. So I thank you for that. Council, anybody have any dire desire to talk numbers with this man any further? All right. Thank you very much for your presentation. I'm sure Cindy will have some more questions for later, but we're good for now. Mr. Sharp, do you have anything to add before I conclude?
Through the mayor, just an acknowledgement of the work that the accounting staff has put in over the course of the last few months to try to pull this together, albeit at the 11th hour, and work with MNP to make sure that everything was reported properly, that the process went smoothly, and that we're continuing to steward the public purse properly within the town. So thank you to Corinne and Ms. Middleton and her staff for all the work that she's put in. Thank you.
Agreed. All right, thank you very much, Mr. Sharp. Tilly?
Thank you.
On the motion.
We will take a motion. Who wants to fight for it?
I'll go on over here.
Mr. Wilkie's making her.
Oh, well, you can do it.
We're accepting for information. That's all.
Do we have to adopt this?
I'm gonna just check my agenda here. Maybe there's something formalized in here.
Mayor Crane,
Yep, go ahead.
excuse me, we just need a motion to accept the report for information.
Yep.
Thank you.
So, Councillor Wilkie just made that. Any discussion? All in favor? Excellent, thank you. And thank you, Ms. Billy.
Thank you.
See you next year.
All right, take care and drive safe. No
Maybe-
snowstorm tonight, so you're good.
Yes, please, no more snow report, we're done with that.
Yeah, I think we're done.
He's gotta get it, we've got him trained now.
I'll give him a couple minutes here. 5.0, bylaw 19-1094. Oh, are you good? Yeah, we're good. Bylaw 19-1094, the Intermunicipal Economic Development Committee, or the IEDC. We gave this first and second reading at our previous regular council business meeting. Tonight we are looking to do third and final reading. So, we've all read this over. Is there any more discussion? Actually, let's take a motion from Councillor Gordon here first.
Yeah, I'll give us the motion that council give third and final reading to bylaw 19-1094, which is the establishment of the Intermunicipal Economic Development Committee.
Okay. Any discussion on that, council? We've all read it over. We saw it last time. There were no additions or suggestions to alter. I ask you again, any questions for clarification?
As I help write it, no.
Councillor Holday.
No questions, just wanted to say that, I'm excited for this new endeavor, and I'm appreciative to the staff and all the work that went into this. I'm looking forward to what's gonna come out of it, and I'm happy to pass through tonight.
Perfect. In that case, seeing nothing, all in favor? That's carried unanimously. Thank you very much.
They move.
Just check. One second. and no items for in camera, so we are adjourned at 7:22. Thank you, general public, for coming, appreciate it.